Okay. Hi, everyone. I'm going to go ahead and share my screen now. Give me 1 second. All right. Welcome to the CDBG-CV Economic Development Quick Guide webinar, part of the CARES Act virtual conference. We are going to let's go ahead and move on to the next slide here. So we are your presenters, Jeremy Newberg and Catherine Mayrose. Jeremy is the CEO of Capital Access, which is a HUD technical assistance provider. And I'm Catherine Mayrose. I am a consultant who works with Jeremy, also with Capital Access.
And we also have Kesha Anderson with HUD Office of Block Grant Assistance helping us out. So you've got a lot of support, and we are very excited to be here with all of you. Our goal is to try to demystify as much of CDBG-CV as it relates to economic development as we can. And the majority of our content is in the Economic Development Quick Guide, which Catherine is going to share with you as we go.
Yep. So just first, a little overview of our objectives for today. So as Jeremy mentioned, we are going to review the CDBG-CV Economic Development Quick Guide. This is part of a series of quick guides that HUD released to assist grantees with preparing to administer their CDBG-CV funds to respond to coronavirus. So Capital Access worked with HUD to develop the Economic Development Quick Guide. There is a link to it on the screen right here. If you are not familiar with this quick guide, I strongly recommend that you check it out if you're at all interested in doing economic development activities with your CV funds. It's a really concise and helpful resource with lots of links and information. So, but today we are going to just walk through the quick guide and kind of elaborate on what it contains. The point of which is to, again, help grantees design and administer economic development programs that prevent, prepare for, and respond to the coronavirus. And then also, we're going to provide some considerations and questions to ask yourself as you're designing your program so that you can make sure that your program is positioned for success. We are also presenting another webinar tomorrow, continuing on this theme. So today is sort of a higher level overview, sort of the theory behind the Economic Development Quick Guide, if you will. And then tomorrow we're going to get more into the practical application of these considerations and regulations and really look at implementing your program. So hopefully you'll be able to join us for that as well. So first we're going to sort of just go into an overview of economic development in the context of CDBG-CV funds.
And Catherine, just 1 minute. For everyone, we are honored and deeply appreciative that there are 230 people on this webinar. So we only have an hour to go through some nice, dense regulatory compliance components. And if you have questions, you can provide them in the chat. And also, we will be doing the webinar tomorrow. What time, Catherine?
Tomorrow is, I believe, 10 o'clock to 11:10 a.m. Eastern time.
And that will be much more focused on, okay, how are you going to implement this stuff? What's your program design? We are transitioning from crisis response in many communities to longer term recovery. So how does that work? And what are those questions? So if you have questions, feel free to put them in the chat. We'll try to respond to them with the time we have. If we don't, we'll also try to get to them tomorrow or just send an email. And there's a fair amount of technical assistance out there. There's going to be these cohorts coming out. And then if you work with your community planning and development field office director, you can make a request for either on-call technical assistance or something related to that. So HUD is committed and invested to making CDBG-CV successful. and let us know what you need. Thank you.
All right. So before we really get into it, just want to make sure everybody's aware of the first steps for generally any activities that you're going to do with your CV funds. So hopefully you have either amended your action plan to include your CV funds, or you're in the process of doing so, or completed your new action plan if that's what you are, how you're going to do it. So before you can incur any costs for CV activities, again, you do have to have HUD approval on your action plan or substantial amendment. And then you also need to have submitted a couple of forms to HUD, the SF 424, 424D, and the certifications as listed in the regulations there on the screen. So again, if you have any questions about those forms, I would suggest that you contact your field rep. But this is just an overview of the items that you'll need to have taken care of before you can do any of the things we're about to talk about. Jeremy?
Okay, so using CDBG funds for economic development. They must be used for activities that prevent, prepare for, and/or respond to the coronavirus. Most CDBG-CV economic development activities that help for-profit businesses will be this special economic development category or a microenterprise. And again, the CARES Act was approved, I believe, in late March, and a lot of grantees in April, May, and June of 2020 were deeply, deeply in emergency response mode. You had mortgage assistance, you had small business working capital assistance and emergency rental assistance. And wouldn't you know, all this stimulus money came out. And that money was larger with a shorter time frame. And for many, it disrupted what was the unmet need that you seek to serve with your economic development program. So what we're going to try to do through this training, our time together, is bring it within the context of, are you still in emergency response, or you might be in longer term recovery? So prevention and response may be more applicable. Next slide. Okay, so special economic development, you see the CFR, you have to meet a national objective. It is typically low and mod jobs and low mod area, involves provision of financial assistance to for-profit businesses, not nonprofits. We had a request where a grantee said, well, we have a nonprofit that runs a farmer's market and it's critical to food for a low mod area. Can we give them assistance under special economic development? No, it's public services because it's a nonprofit. And you can do special economic development for acquisition of property, clearance of structures, construction, expansion, rehab, purchase of equipment, provision of operating capital. That's working capital. You must underwrite and you must identify the public benefit, which is either creation or retention of jobs, or showing that you provide goods and services to a low and moderate income area for the benefit of the people, institutions, and businesses in that low mod area. Now, construction, expansion, rehabilitation of a building. An example of that could be helping a business facility, a store, a restaurant, a bodega become more COVID resilient. COVID resilience improvements could include a new air handling system, a new HVAC system, touchless appliances, doors that do not have handles, a redesign of the layout for better physical distancing. And the beauty of that is if there are code issues like the electrical system is antiquated, well, you need an electrical system to run a new HVAC. So that's the beauty of thinking about COVID resilience improvements. Next slide. So what's a microenterprise? To be a microenterprise, you have to have no more than 5 employees, and at least one of the employees must be the owner. SBA defines microenterprise as 10 or fewer. HUD, it is 5. Next.
Oh, can I just add one thing too about microenterprise? So we said earlier that the main national objective categories we were going to focus on were going to be low mod area or low mod jobs. The exception to that is that if you are conducting microenterprise activity and the business owner is LMI, that is generally the only circumstance under which you could qualify economic development activities as low mod limited clientele or LMC. So that's just something to note.
Now, in the Economic Development Quick Guide, we dedicate a section to every one of these slides. And what we did in the Quick Guide was we referenced the regulatory notice that HUD produced in August and the actual section. And then we also referenced outstanding HUD regs with CDBG, basically CDBG. So what we were trying to do is thread the needle for you as you figure out your regulatory pathway. And of course, technical assistance can be a resource to you as you sort that out. So what is an eligible micro enterprise activity? It can be credit, not limited to grants, loans, loan guarantees, individual development accounts, other forms of financial support that help the enterprise. I would caution you all, in a disaster, underwriting for a servicing loan can be really challenging because the world changed. And you might want to look more closely at grants or due on sale loans. It's just harder to underwrite. Technical assistance, advice, business services to owners, general support to owners of enterprises or those developing, general support such as peer support, counseling, childcare, transportation, training, technical assistance, and other support services to increase the capacity of recipients. So we've seen a lot of working capital grants going to micro enterprises, but you can use working capital grants or loans to businesses that would be under special economic development. Next. Good Lord, we're getting a lot of questions. All right.
Oops, hang on. Sorry, wrong way.
Now, a micro enterprise does not have to meet a public benefits standard. And as we'll get into it in a moment, the public benefits standard for low mod jobs is for every $85,000 in assistance, you have to either create or retain a job. And you don't have any of that with micro enterprises. There are more options for national objectives, such as the limited clientele criteria for low moderate income benefit, because it can be applied to activities if the owner is in fact earning a low mod income. The thing about micro enterprises is you got to find them. Where are they? So that's a needs assessment question. Where are they? What do they need as we transition from crisis response to recovery investments? Next.
Okay, so I'm going to spend a few minutes talking about the waivers and alternative requirements that are provided for in the CDBG-CV Federal Register Notice. Before I do that, I'm going to quickly jump up to the Q&A because I saw there were a couple of questions that are pretty quick. I do want to reiterate that if you have a question, please feel free to put it in that Q&A. I'll try to monitor that as we go through the slides, but if I don't get to your question, we did dedicate a few minutes at the end for questions, so we'll try to go into it in more detail then if we don't get to it now.
So Q&A is in the center bottom, and it's to the left of chat on your Zoom screen. You'll see that there are already 6 Q&A questions. So all the people that have given us questions in the chat, just copy and paste them in the Q&A and we'll try to get them. Thank you.
Right, so the first question is thinking about the importance of development, analysis tools and toolboxes to help with training and implementation of economic development activities and making sure those resources are accessible and helping to make sure that the funds are accessible. So for that, the first thing that comes to mind is just we do have the quick guide lists several resources, links to resources. Actually, I'm going to let Keisha take this one. Keisha?
Oh, no, go ahead.
Oh, I got a little flag that said that you were going to answer that one, so that's all right. So yeah, I mean, the first place to start would be to look at the resources on these slides, which are basically the same as the resources in the quick guide. And then in terms of partnerships and other local resources that might be available, that would obviously be something that you would want to include in your program design, is assessing what's available in your specific community. I think that's as specific as I can get at this moment, but we can certainly talk more if there's time during the questions or tomorrow. So the next question: if we help micro enterprises with equipment purchases or loans and grants, and the national objective is LMC, do we need to enter each business in IDIS separately, or can we aggregate into one activity? And does every business owner need to be LMI or 51%? Jeremy or Keisha, do you, either of you want to speak to that? If not, I would. Sorry.
Yeah, let's go through the presentation, because I have a feeling we're going to get through the presentation quick, and then we'll just go through the questions for as much time as we have left.
Okay, that's fine. So waivers and alternative requirements. Sorry, it likes to stick when I'm trying to switch. Okay, so the source of the CDBG-CV requirements, the main source is going to be the Federal Register notice. So anytime that there's a special appropriation of funds, such as CDBG-CV or your disaster recovery or MIT funds, those are going to be published in the Federal Register in the form of a Federal Register notice. So those, in general, you're going to want to look at the basic CDBG regulations for your framework, but then the Federal Register notice can actually modify certain provisions of the CDBG regulations. They can either waive them, or they can waive them and put in an alternative requirement instead. So if the Federal Register notice does not speak to a certain issue, then you would want to go looking in the CDBG regulations to find out the answer. And it is important to note too that HUD can't waive or alter any of the cross-cutting requirements. So the Federal Register notice generally says that, but there are certain requirements that HUD does not have the authority to waive, especially primarily if they're cross-cutting and a different department administers those. So we're going to cover a couple of the flexibilities here, these waivers and alternative requirements. I do want to note that the small print right under the header is the specific section of the Federal Register notice where you'll find these specific waivers and alternative requirements. And Jeremy, this is actually you.
Okay, so overall benefit to low, moderate income persons. And you see up top here, section 3B5. This is where it is in the federal notice. Get comfortable with federal notice. It is 75 pages. If you need a shot of espresso, I understand, but there's good, dense information, and it reflects an effort that HUD made to make this a more flexible program. So CDBG, and you've got to invest at least 70% of your grant to benefit low mod income persons or areas. You can't do everything under urgent need. And so you're going to have to think this through. CDBG-CV overall benefit must be tracked separately from the 2019 or 2020 entitlement funds, which are tracked on a program year basis. But the beauty of this notice is that you can expend 2019 and 2020 funds with the same waivers and alternative requirements as CB, which is really cool, because that means that if you want to go big on something, like maybe there's some commercial corridors where the businesses are really tired and they're not meeting code and the air exchange is terrible and a lot of people use them, and you want to do COVID resiliency improvements, and it might average 50 to 150,000 a structure, but you knock it out. That's the beauty of looking at reprogramming some of your 2019 and 2020 funds within one big program. And one of the things that's been of concern to me as looking at some CDBG grantees, not all, they do a hello, notice of funding availability, give us your economic development programs, and oh, by the way, read all these regs and figure it out. With CDBG-CV, you're probably going to have to spend more time on your program design to give a more defined swim lane for your grantees to develop proposals, sub-grantees. Next. So national objective. Economic development is typically under low moderate income jobs, low moderate income area served, low moderate income clientele, or urgent need. And in the notice, HUD is really clear. You better be methodical when you decide to use urgent need, particularly with all this stimulus money out there. Make sure you can prove that there weren't any other funding sources that could have paid for what you want to do with CDBG-CV under urgent need. So we recommend that you prioritize low mod areas, low mod jobs, low mod clientele before urgent need, if at all possible. It is a safer strategy for compliance. The low mod objective has subcategories, and think of them in terms of benefits. So low mod area, LMA, benefits residents who are in a low mod area. Low mod job benefits communities by creating or retaining jobs, and low mod clientele, the benefit of low moderate income individuals, which may be determined by several methods. Next. So let's talk about jobs. Low mod jobs applies to activities that involve employment of persons, the majority of whom are low moderate income, creates or retains permanent jobs where at least 51% are on a full-time basis that are held by low mod persons or considered to be available to low mod persons. But it doesn't specify the total number of jobs that must be created or retained, only that 51% must be available to low mod persons. And the total number of jobs that must be created or retained depends on the public benefit standard, which we'll get into in a minute. My recommendation is whenever you're trying to retain or create jobs using that national objective, make sure you work with your CPD rep and even CPD director in the field office to just go through the program design with them and get their blessings, just to clarify the approach. Next page. So there's some wonderful flexibilities for low mod jobs. The first is location-based presumption of low mod benefit. So when you're documenting low mod income jobs, the grantee may presume a person is low mod income if the census tract where they live or where the assisted business and job is located has a poverty rate of at least 20% and has evidence of pervasive poverty and general distress. So that's incredible flexibility where you need to work and define the area that the business serves and then use the HUD website for the poverty data to do the overlay. Did I get that right, Catherine?
You did. I just really want to emphasize that poverty rate is not the same as low mod area. So I know personally that in another life, the first time I encountered this presumption, I was like, oh, great, poverty rate of at least 20%. Like, that's easy because, you know, we're not doing this unless it's 51%. Well, it's actually a different metric. It's a different, you know, way of calculating the data. And a poverty rate of at least 20% is going to be well over 51% low mod. So just be careful with that and just know that it's not the same thing.
And one of the things that happened last year with all the small business working capital, right? If we don't have working capital, we're gonna have to lay people off. If we don't have working capital, we're gonna close, right? That was the crisis mentality, and it was completely understandable. And many counties and cities said, what's this area stuff? What's this low income stuff? I've got to save the county. I've got to save the city. And so they were looking for the most flexible money to serve a wide range of businesses located anywhere. CDBG is focused on low mod income benefit, low mod area. And once you do the work to define that area, then go and see what businesses are located there and reach out to them and see what they need. Next. So, oh, Catherine, please.
You were doing great, but yeah, so just to say a little bit more about the flexibilities in the Federal Register Notice for CV funds. One of the advantages in this case is that if you are doing an activity under the LMJ National Objective, and you're looking at the workers whose jobs were either created or retained, and you need to determine if they are LMI, you can actually just consider them a household of one. So you don't have to look at their entire household income and calculate what all of their family members make. You can really just look at that one person, that one worker, and what they make. And in general, that's going to be assuming, you know, that the person is only working the one job, then that's going to be whatever the wage or salary that the business is paying them. So in this case, you can substitute records just showing what their job is and what their salary is at that job, rather than the traditional income documentation that you would collect if you were doing a different type of program, such as, you know, tax return or things like that.
And this is huge. This is a huge compliance innovation in terms of flexibility for HUD, because it's focusing on the wage of the job rather than the income of the household, which makes it vastly easier to do monitoring because you do the monitoring up front.
Right.
Next. Okay, so urgent need. Here come the hard questions from HUD for accountability, given that you've been flooded with so many stimulus funds. Is the activity designed to alleviate existing conditions? You document it by how the activities prevent, prepare for, or respond to corona. Does the condition pose a serious and immediate threat to health or welfare of the community that is of recent origin or that recently became urgent? Health and Human Services Public Emergency Declaration, Federal Disaster, or state or local emergency declaration. Well, those direct declarations were last year. Okay, and we have a vaccine. We also have a Delta variant and a Lambda variant. So no one can say we're in full recovery. We're in some phase of transitioning from crisis to recovery. And these virulent, persistent virus could come back in some shape or form. But you got to be really clear that there's an urgent need now. Is the grantee or unit of local government unable to finance the activity on its own? And are the sources of funds not available to carry out that activity? So these would be activities to prevent, prepare for, or respond to coronavirus. So let's say you want to help a small business that's not located in a low mod area, and you want to do it under urgent need for working capital assistance. Well, if PPP is open or an economic injury disaster loan is available or other grants, what is the unmet need that CDBG is filling? Okay, that's one way to look at it. But now PPP2 was really in the first quarter of 2021 with the COVID relief bill approved in December. And now we're in the third quarter of 2021. And most businesses have spent their PPP money. They may in fact have a working capital need, and they may in fact be able to prove that the distress that they're encountering is tied to COVID. So apples to apples, oranges to oranges in terms of not only what funds are available, but for what use and over what time frame. Thanks.
I'd also like to just add that if you have additional questions about this slide, if you want more specifics on what does the documentation actually look like, last fall HUD published a two-part webinar about the CDBG-CV Federal Register notice that went into a lot more detail about answering those questions, and it's really helpful. And you can find that on the HUD Exchange. So again, if you're not clear about this still, and you do think you're wanting to use urgent need for any of your CB activities, that would be a great webinar to check out.
So now we move into underwriting, and I said underwriting's hard. What do I mean by that? Well, attend our webinar tomorrow and we'll go much deeper into it. So underwriting criteria for special economic development must be developed and utilized consistently in the evaluation of projects. And what HUD says is that your underwriting must include how the activities prevent, prepare for, and/or respond to the coronavirus. Cost reasonableness. The project costs are eligible, reasonable, clearly defined, and committed. The project is financially feasible. The return on the owner's equity will not be unreasonably high. That is the undue enrichment criteria. CDBG funds are dispersed on a pro rata basis with other finances provided to the project and are not being substituted for non-federal support. So CDBG wants to be the gap money, and it doesn't want to be all in if other sources are coming in. It's a fairness provision. It's an unmet need provision. So what do I mean by underwriting is hard? Well, Capital Access, we ran a CDBG-CV small business working capital grant program in Florida last summer. And we were going to businesses that were in a travel resort area. And I was astounded at how many cafes, restaurants, little small hotels had skeletal financial statements. Some were just keeping track of their revenue and expenses with Square that keeps track of their credit card activity. And the notion of presenting the idea of change in current assets minus change in current liabilities, it was as if I was speaking a foreign language. Now we have some other very sophisticated businesses, but you've got to be flexible with the capacity of your businesses. So yes, you want to look at balance sheet, you want to look at income statement, you want to see if the business has a plan of how they're going to recover. And that takes some thought in structuring your underwriting. And often the underwriting isn't so much to hit a ratio, but it's to go through these criteria. Is it cost reasonable? Are we avoiding undue enrichment? Will the business be viable as a going concern? Well, if you load a business up with debt that they have to service as they're recovering from the pandemic, just be careful you're not setting them up for failure. And then most importantly, be explicit on your tie back to the coronavirus. Thank you.
So I'm going to go ahead and talk about the public benefit standards. So the underlying idea behind public benefit standards, for those who are not too familiar with special economic development activities, is that if you're providing public funds to assist a private business, then HUD says that there needs to be a substantial benefit to the public because it's public funds. So that's the concept behind it. Public benefit standards only apply to the category of activities in CDBG known as special economic development activities. So as Jeremy mentioned, they do not apply to microenterprise. Normally, there are two public benefit standards. There's the aggregate public benefit standard and the individual public benefit standard. The aggregate public benefit standard is basically the total of all of the economic development activities that you're doing. I'm not going to get into that really because the great news is that the aggregate standard is waived for CDBG-CV funded activities. So we don't really need to talk about that. So the individual public benefit standard is the one that you're going to need to concentrate on. There are a couple of different options, and this is provided in the notice, a modification. So basically, the individual public benefit standard is a calculation of how to quantify the public benefit. So you can either document that the activity creates or retains at least one full-time equivalent permanent job per 85,000 of CV funds invested, and that is normally 50,000 per job. So by increasing that number, that is actually making compliance, making it easier to meet that regulation. So in other words, if you were to give a business $850,000 in CDBG-CV assistance, then that business would have to show that they created or retained 10 full-time equivalent permanent jobs. So it's basically just a calculation. So that is full-time equivalent. So it doesn't have to be 40 hours a week. It could be 2 20-hour-a-week positions, but that's what they mean when they say full-time equivalent. Also does have to be permanent jobs. And then you do have to be able to document that as well. The alternative is that the activity, instead of basing the public benefit on jobs, you could document that the activity is benefiting the public by providing goods and services. If you choose to go that route, then there's a calculation similar where the number of LMI people residing in the area needs to amount to at least one person per $1,700 of CDBG funds invested. Normally that is 1 per 1,000. That's a little more complicated to quantify. It does require you to define a service area. So you're typically going to be doing this one if you're doing the activity as LMA, and then determining how many LMI people are in the service area, and also then quantifying the value of the goods and services that the business is providing. So it is a little more complicated. I will also want to note that when it says CDBG-CV funds invested, that is referring to either a loan or a grant. So it's not just a grant. The third way, which is new in this Federal Register notice, is that if you're providing the funds because the business was disrupted due to coronavirus, then you don't have to calculate and quantify a monetary standard, because they're figuring that preventing economies from collapsing is enough justification of public benefit. So that's kind of a third option that is not normally present in the CDBG program.
And so, Catherine, what would be an example of that?
Of providing assistance due to business disruption.
Yeah, would like targeting a series of business facilities on a commercial corridor where a lot of it was personal services that required human interaction, would that fall under it?
I think if you can document that clearly and that there's a connection and the businesses were disrupted or at risk of disruption due to coronavirus, then I would say that should count.
Thank you.
Yeah, and then just also note, as Jeremy mentioned before, but want to make sure that the point really hits home. Public benefit standard does not require you to make the jobs available to LMI persons by itself. It's just calculating the total number of jobs that are being created or retained. And I should add that this last bullet point mainly applies to the job creation standard. So you're not required under this to make 51% of the jobs available to LMI persons. If you are doing this under the LMJ national objective, then you're going to have a public benefit standard that's going to tell you the total amount of jobs that need to be created or retained. And then you would also have this requirement that 51% of those jobs are going to low and moderate income people. And I think we have a next slide that's going to really hit home with that. Again, LMJ versus public benefit, they are not the same thing. The public benefit standard pertains to the total number of jobs created or retained. The low mod jobs national objective stipulates that 51% of any jobs created or retained must go to LMI people, or I should say be held by or made available to LMI people. And you do have to be able to document that. Okay, so now I'm going to zip through this because I want time for your 17 questions. We're about 2/3 done the slides. So these are opportunity zones, nonprofits, financing mechanisms.
So you can provide assistance through a financing mechanism, not just new market tax credits. If any of you are familiar with new market tax credits, it's all about leveraging, and it's deep financial engineering where you create these special purpose entities to essentially get more equity into the project. And so CDBG-CV funds can be used with new market tax credit projects. A nonprofit may pass assistance through a financing mechanism, which is a financing mechanism is typically a guarantee or a single purpose entity that is essentially pulling a lot of different money to facilitate, again, getting more equity into the project. This is particularly the case with opportunity zones that came out within the last four years. But this is very tied to opportunity zones and tax credits. It is not special economic development. That is a different category. And so I know you have a lot of questions about what can you and can't do with nonprofits related to economic development projects, and we'll hit that in the Q&A. Next. Float is a financing mechanism. Grantee may not use CDBG funds for float-funded activities. It's essentially it's financial engineering, and it's typically tied with a bond or a new market tax credit deal. During periods of economic distress, business may be better served with grants rather than amortizing loans or more complicated loan pools. If it's a disaster, keep it simple. Keep it simple. Next. Section 108 loans. CDBG funds may not be factored into a grantee's Section 108 borrowing authority. Please only use your 2019 or 2018 to calculate how much you can do in a Section 108 loan. HUD provides that on the HUD exchange for actually every grantee in the country. Grantees can use CDBG-CV funds to make direct payment of principal, interest, or any fees due under Section 108 if direct payment is related to disruption or loss due to COVID, okay? So if the project that was being funded with 108 suffered disruption or loss due to COVID, you can look at that for paying down the principal, interest, or fees. But if it's just a separate 108 project, no. Okay, grantee can use CDBG funds to supplement assistance to businesses initially provided with Section 108 loans when necessary to prevent, prepare for, and respond to coronavirus. So the documentation that the original assisted activity satisfies the national objective criteria shall be sufficient to demonstrate that the use of the guaranteed loan funds and additional CDBG-CV assistance meets a national objective. So what HUD is trying to do is recognize that there might be some Section 108 projects that suffered disruption loss due to COVID, and you have some flexibility to deploy CDBG-CV to get them back on a sounder financial footing. Next. Okay, tie back. That's you.
That's me. So all CDBG-CV funds are required to tie back to coronavirus. Tie back is, I think, not an official term, but it does mean that you have to document that all of your activities that you're funding help to either prevent, prepare for, or respond to coronavirus. You probably heard HUD has referred to this as PPR, which is prevent, prepare for, and respond. So the activities need to tie back to coronavirus, but not necessarily the beneficiaries. And we will get into this in more detail tomorrow, because I think it's an important point that will be helpful for a lot of grantees for where we are now in the recovery. But basically, if you're funding businesses, you don't necessarily have to document that that specific business was impacted by coronavirus. So you could assist a business that's a startup, potentially, and the tieback could be that the startup business is going to occupy a space where a business was shuttered due to the shutdown last year, for example. So you can go a little bit broader than just working capital to a business that suffered. So there are a couple of examples here. Business is going to hire people who became unemployed due to coronavirus, or again, startup businesses that are offsetting other business closures. So again, it's just a little bit more of a broad tieback that is permissible.
Okay, duplication of benefits. Apples to apples, oranges to orange. Remember, when you do duplication of benefits for businesses, particularly working capital assistance, it's not just what is the purpose of the potentially duplicating business, it's under what time frame did you deploy the money. And so when you do any type of working capital assistance, always be clear on the compliance period that the CDBG funds are deployed. So an example, you're going to provide up to $50,000 in working capital for 6 months of activity. Well, great. Okay. And let's say those 6 months of activity are from July 1st to December 31st. Wonderful. Well, the business applied in January and got PPP money for 3 months of working capital, which was February, March, and April. Is that a duplicating benefit? No, because it was a separate time frame for the need. So you got to be clear on when is the money needed and for what purpose. So grantees must develop and maintain adequate procedures to prevent duplication of benefit that require, at a minimum, you assess whether CDBG-CV funds will duplicate financial assistance already received by the business for related unmet need and period of performance. Underline that, highlight that with your highlighter, period of performance. Any person or entity receiving CDBG-CV assistance, including subrecipients or direct beneficiaries, must agree to repay assistance determined to be duplicative and can be addressed through a subrogation clause. Say that 5 times fast, subrogation. And the subrogation clause in the grant agreement says, if at any time we find that there is a duplicating benefit, you as the subrecipient or direct beneficiary must pay back. You want to do the duplication of benefit analysis part and parcel with the underwriting. It's part of the grant award calculation. And so you got to avail yourself to understand what you're trying to do. What worried me the most about duplicating benefits for businesses was not PPP. And it's not even the restaurant assistance or these special purpose grants. It's the economic injury disaster loan. Because what we saw was too many businesses were getting very large economic injury disaster loans and then holding it in reserve because, it's a crisis. They didn't know what was going on, but they still needed working capital to make payroll. Well, why don't you use your loan proceeds from your economic EIDL loan? Well, because I don't want to take on debt. I'm in a crisis. Oh dear. Now, if the economic injury disaster loan was for a different purpose, such as to pay for inventory, and your CV working capital loan is to pay for rent and payroll, well, then that's a different use. And it's not a duplicating benefit. But you got to make sure that the business is clear on what they're using other potentially duplicating sources. What is the purpose of other potentially duplicating sources? Next. Grantees should incorporate DOB review into their program design, application intake, and verification procedures. Ask many times, are there any other potentially duplicating sources? What you're really trying to do is identify and then analyze and hopefully eliminate. But if you do find a duplicating benefit, then you need to subtract it from your CDBG-CV award. Underwriting procedures should demonstrate the following: how due diligence is conducted by the grantee, subrecipient, and/or contractor for program management, how the grantee and its subrecipient contractors and/or partners assess and become familiar with other assistance sources. So we've got the CARES Act, which had a lot of economic development in it. We've got the COVID relief bill in December, and then we have the American Rescue Plan that was approved in April. A lot of money out there. And SBA has been promoting a lot of small business assistance out there. What we've also found is that in many low moderate income areas, a lot of these businesses aren't that sophisticated to apply for an EIDL loan. And while it might have been available, they didn't have the wherewithal to apply. And so take that into account. Just because PPP or EIDL is available, but if they didn't apply, then it's not a duplicating benefit. Working capital assistance needs to document that the grant or loan performance period in relation to the amount of assistance being provided is reasonable, and whether a business has access to SBA or other funding during the same term. It may be that a business that you're trying to help is so fragile that to get an SBA servicing loan puts them at risk. So then a CDBG-CV grant or forgivable loan might be a better solution. Just be clear on the analysis and document it. The monitoring includes re-verification or calculation of the need at the end of the grant or loan performance period. And so whenever you're doing working capital assistance, always be clear on the performance period, because that's how you can, put your line in the sand for DOB analysis. Next. Okay, so what are some potentially duplicating benefits? There's the economic injury disaster loan, the Paycheck Protection Program loans 1 and 2, restaurant revitalization fund, shutter venue operators grant, and there are a whole bunch of other SBA assistance programs, as well as federal, state, local assistance programs. Be clear on what is the purpose of the potentially duplicating benefit compared to the intended purpose of the CDBG-CV assistance. Keep going.
So we're going to talk briefly here about program design and delivery considerations. Again, these are listed in the quick guide. I'm going to go through them fairly quickly because I know we're running out of time and we have a lot of questions, and also we are going to go more in depth on these topics tomorrow. So guiding questions to start with as you're trying to figure out how to allocate your funds and what activities to undertake. First, concentrate on what problem are you trying to solve? What is the need? Obviously, that's going to be associated with doing a needs assessment and trying to gather data. But some potential needs or problems that you might be focused on would be that businesses lack working capital, or there are gaps in the supply chain due to COVID. I know that personally in my area, that's been a huge concern for us. There are, safety and sanitation concerns for workers and customers who are interacting in public places and stores. And there are a lot of people who lost their jobs due to COVID and may be in need of some reskilling or assistance with job placement. So, those are some potential problems that your community might be encountering that could sort of point you in the right direction when you're doing a needs assessment, to give you an idea of where to look to start trying to figure out what the needs are. Once you have identified the needs and kind of gotten an idea of what the most pressing problems in your community are, then you're going to want to figure out who is best suited to do the work. As a grantee, you do have several options when you're looking for partners or vendors to carry out your funds. You can do the work yourself, or you can sub-grant to a subrecipient. You can contract with a vendor, you can work with a nonprofit. So you do have a lot of different options, and each of those options has its own pros and cons. So you're going to want to really look at kind of what you're doing and who's going to be the best fit for it. And then once you've decided the need and the who, then you're going to look at compliance and figure out kind of what you're going to need to make sure that your program is compliant and audit ready. So that's going to be more of the forms, procedures, the written stuff. So policies and procedures, an outreach process, a case management process, a procedure for doing duplication of benefits review, making sure that you're equipped to manage the funds in an efficient and responsible manner. So those are kind of the three components of, or the three layers of planning your activity. Some other factors to consider is what do you want the form of the assistance to be? In a lot of programs, you may be used to just doing grants, but you do have options to do various types of loans as well. Due on sale, forgivable loans. In a crisis like the coronavirus situation, it may be a little more workable to do grants or forgivable loans because if you're doing loans that have to be serviced, then you're looking at another administrative component for your staff to manage, as well as potentially making it more difficult for businesses and even disincentivizing participation if businesses don't want to take on more debt. Then you're going to want to look at underwriting criteria. And again, we will talk about this in more detail tomorrow. But at the minimum, you're wanting to make sure that the funds are going to be going to good use and that they're likely to result in an impact that you intended. So looking at that the business is able to repay, that the costs that they're going to use are reasonable, that the business is in good standing. And obviously you do need to think about what's going to happen if the business doesn't perform. So, there are different security instruments that you can use and collateral just to make sure that the investment is protected. And then lastly, you're going to want to consider that there is a 3-year deadline to expend 80% of your CDBG-CV funds. So you're going to want to incorporate that timeline into your planning process. Then the last item to consider is just that, as with any CDBG activity, there are numerous cross-cutting federal regulations that do apply. CV funds are no exception, so you are going to need to perform an environmental review on each activity that you're undertaking. Depending on the type of activity and threshold, you may have Section 3 and labor standards that apply. If you are procuring vendors, then you'll need to follow the procurement regulations in 2 CFR 200. If it is anything to do with, assistance that results in the displacement of residents, workers, businesses, you might have some relocation you have to think about. And then with any of your activities, you need to make sure that you're complying with the fair housing and equal opportunity requirements as well. So the last section of our presentation today is just some resources that can help you as you're navigating through the process of administering your funds, doing economic development. So there are a number of economic development resources, starting with the quick guide. So here's the link to the economic development quick guide. It's also in one of the introductory slides to this presentation as well, which we covered earlier. And then there's the Economic Development Toolkit, Micro Enterprise Toolkit, which is extremely helpful if you're looking for the nuts and bolts of micro enterprise. So the regulations, so I'm not going to read through all of them, but these slides will be made available, and all of these resources are in the quick guide as well, so you can also look for them there. And then last, there's some general CDBG-CV resources as well. These are all available on the HUD Exchange. They are also, again, linked in the quick guide, which is on the HUD Exchange as well, and linked in this presentation. So I think that is it for us, except for the questions. And it looks like
so it's 1:58. Here's what we have a hard stop at 2, right? Right?
We are scheduled to end at 2.
Okay.
Yes.
So what we're going to do is we're going to take a look at all your questions and see how many of them we can answer tomorrow. And maybe that's our hook to get you to join us tomorrow at 10 o'clock. We'll see, we'll cluster and take a look at these questions and see what we can do with them. In addition, you can submit these as part of the AAQ function with HUD technical assistance. Just go back up Catherine, show the link to AAQ, ask a question. You
Second
click
one.
that link and you can submit these questions and HUD will review. That is actively staffed. And we haven't had as many questions recently, so go flood them. It's good stuff. Good staff are working on that. They take it seriously. Why don't you bring us to the last slide? So the name of our session tomorrow is?
It's implementing your CDBG-CV economic development activities is the name of the slides, but I believe on the agenda for the conference, it's economic development to prepare for, prevent, and respond to coronavirus. So that's what we want to look for.
We're going to focus more on implementation models. And this isn't HUD saying, do it this way. And it's not Capital Access saying, do it this way. It's saying, here's something for you to consider as you assess your needs and capacity and opportunities in your communities. So we will work on your questions. And we want to thank you all for your time. And we ask that you be brave, bold, and persistent as you help your communities prevent, prepare for, and respond to the coronavirus pandemic. Thank you so much, everyone. And we hope to see you tomorrow and beyond. Thank you.
Thank you, everyone.